Is the dollar yen about to rocket higher, or is it hitting a brick wall? Welcome to your weekly market pulse on USDJPY, where we cut through the noise to see what's really driving the price. Right now, the market is in a fierce tug of war, with the pair hovering around the critical 147 level. The overall sentiment is incredibly mixed, showing a deep division between bulls and bears. On one hand, the bullish camp is feeling confident. They point to a strong uptrend where a buy on the dip strategy has been paying off. We're seeing chart patterns like a double bottom and a morning star, which suggest the upward momentum could continue. Some are even calling for a long position, seeing the recent bounce from support as a sign of strength. However, the bears are not backing down. They see a formidable wall of resistance. Technical analysis highlights a major battleground right around 147.30, with a significant supply zone extending up towards 148.00. Some charts are even mapping out a potential downward move from this area. Adding fuel to the fire is news that the Bank of Japan might be considering an increase to its inflation forecast. If that happens, it could strengthen the yen and send the USD-JPY pair lower. So, what are the key levels to watch? For sellers, the resistance zone between 147.30 and 147.60 is the line in the sand. If the price struggles to break through here, it could be a signal that the bears are taking control. A rejection from this area could be a potential selling point. For buyers, immediate support seems to be forming around 146.90. The bulls are looking for the price to hold above this level and use it as a launchpad. A successful break above the 147.60 resistance could open the door for a push towards the next major target at 148.80. So, let's summarize the key takeaways. First, the market is at a crossroads. There is no clear consensus, creating a tense and uncertain environment around the 147 level. Second, the bull case rests on the established uptrend and key chart patterns, with traders looking to buy on any sign of weakness. Third, the bear case is built on a strong technical resistance wall and the potential for a fundamental shift from the Bank of Japan. In conclusion, this is a moment for patience, not prediction. The current price action is like a coiled spring, and the direction it breaks will be significant. Watch for a decisive move above 147.60 or a breakdown below 146.90 to signal the market's next intention. As always, do your own research and manage your risk.